Hi, this is Todd Baker, sales leader and certified mortgage planner with Service First Mortgage. And I am very passionate about two things. Number one, I love to help homeowners create wealth through the purchase and management of real estate. And number two, I love to help real estate agents grow their business. It's what I do. So in addition to doing loans, I also train and coach loan officers and real estate agents. And I do that to help you grow your business. I wanted to share with you something I thought that you would really enjoy. It is a book called Atomic Habits, and I actually like it on Audible. I know a lot of us like Audible these days. And it talks about how tiny changes can lead to remarkable results. In listening to this book, it inspired me not only to look at my own systems constantly, but I really had crystal clear 5 really tiny changes that you could do as a real estate agent in your habits each day to really change the outcome of your business and have a huge impact. And so I want to go over what those are. These will lead to some remarkable results. The first habit is the habit of confirming loan approval. The second is the habit of data input. The third is the habit of rapport building. The fourth is the habit of daily prospecting. The fifth is the habit of going the extra mile. So today we're going to talk about the habit of confirming loan approval. And let me tell you why that's so important. Most real estate agents and most loan officers, and I'm just going to say anecdotally, in the high 90%, it's over 90%, are mediocre at best. And what I mean by that is that they are not committed to their sales craft as a craft, nor are they committed to developing and maintaining systems that result in a predictable, great outcome. They're not highly trained professionals. And so as a real estate agent, when you get a prospect in, whether it's a listing that are also going to buy, or it's a first-time home buyer, or somebody just bought, they've been renting for a while, they go to buy, you have a buyer prospect. One of the first things you're going to ask them, of course, is, are you paying cash or getting a loan? And usually they're going to tell you, we're going to get a loan. Well, the next step is you say, well, great, are you been pre-approved? And usually they'll say, yes, I've been pre-approved. Sometimes they say no. So when they say no, the normal practice is you have your go-to lender. Many of you have multiple lenders, and they'll say, here's 3 or 4 cards to compare rates. That's a horrible practice, by the way. It's not good for you nor the borrower. You want to have a great relationship with a primary lender that's going to provide an extraordinary customer experience that's going to help drive referrals to you and help them create wealth. You don't need to have people competing like that. You want somebody doing that to you, and it's not good for your productivity. But that being said, a certain amount of time, maybe half the time, they're already pre-approved, right? So what do you do with that? Most real estate agents simply say, okay, I need the letter. I need the letter, and and they don't refer out until there's a problem. And the problem usually occurs when? In the middle of the transaction. So let me briefly explain why that's not a good practice to not get that double checked and how to confirm that loan approval. So what happens is most loan officers simply base their approval letter on a credit score and whatever data input the customer put into the loan application. They're pretty much all done online these days. Everyone's got apps and it's all done online. And so loan officers they look at the score, and if the score itself is high enough, and that whatever the client's input was, they base their pre-approval based on that. They're not really doing an analysis of credit history, because that has a huge impact on whether student loans have to go in the debt ratio, are there collection accounts that could be an issue, were there judgments that were unaccountable, or tax liens, or for example, on income. People put income in there, well, they might be W-2, but what if they're variable hours? What if they're part-time? What if they're self-employed? You have to look at documents to make sure. What if you're looking at assets? They say, oh, I've got this money, and then you find out, like you get a contract, you find out it's all cash, and there's no way to verify it. Stuff like this. You guys all know this. It happens to you all the time. There's an easy solution. A simple, tiny habit is what you do is this. You say, listen, I'm going to have my lender call you. It's part of my process when I'm working with a home buyer. And all they're going to do is confirm with you that you were put through a pre-approval process that verified everything. That's it. They don't have to check credit. It's not a sales call. They're just going to take about 5 minutes just to do a quality control check. That's what I do for my real estate agents. And let me tell you what I do. It's not a sales call. So when you give that prospect to confirm the loan approval, I'm simply going to call, reach out, and find out whether or not they've actually been pre-underwritten, really. And what I find out normally is everyone knows the amount they've been pre-approved for, but as soon as I say their payment, as soon as I say what kind of loan type, as soon as I ask them if they know the cash to close, the wills come off the cart. And then I'll find out, like, typically they haven't verified income, they haven't looked at assets. And at that point, I'll usually say, listen, why don't you get a second opinion? But it's a sales call, but really high-level sales. High-level sales is when no one knows you're selling them at all. Because I'm not really trying to convert them into using me. I'm really trying to add value to you to make sure that you have a bankable, fundable loan. In the event they've had a sloppy pre-approval and I've got good rapport with that borrower, I will convert them over to me, and then I will do it correctly. You will have a bankable, fundable loan. Let me tell you why that's so important, just real briefly. Let's assume that your average week, your productive hours a week is 40 hours. I'm going to take 40 hours times 52. That's 1 year. If you look at that, you can see that. That's 2,080 hours. You need to make sure every one of those hours is directly linked to what's going to drive your life plan, because that's what's going to give you the kind of quality of life now and in the future that you enjoy. It's going to give you balance. It's going to allow you to do things. And the only way to make sure those are productive on this particular component of your sales process is to make sure that every time you have a pre-approval that's not with your preferred lender, it gets double checked. So I hope you found that helpful. Please subscribe to my YouTube channel, The Prosperous Agent. The link is in this email below. And I also put the link to the book. And I'm here to help you any way I can. Thanks so much and have a great day.